Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of Paris rapeseed, Winnipeg canola and Malaysian palm oil markets. Paris rapeseed. I have said this now for over 3 months. It was, still is, sometimes a sheer joy to write commentaries. Why, say you? And I say because of the beauty of the patterns that show themselves. Well, the Paris rapeseed daily chart continues to exhibit such beauty here. There are still 2 key patterns. The first and larger one is the February 2021 to July 2022 ascending broadening wedge pattern. This has by now disappeared up over the top left of my daily chart. To be honest, it is a large but imperfect pattern. It had been the main market driver higher in the early part of 2022. The break lower in July last year left the following incredible targets on the downside, which I highlighted at the time. The primary target X is in the 352 even area, with a harder to reach secondary target X1 in the 217 area. These were, at the time, well, pretty much way out there targets that you could put into your diary on the back page and just look out maybe once or twice a year. There was, still is, a newer, smaller pattern, though it deceivingly looks quite big on this daily chart. It is the early July to late October 2022 bearish Andrews pitchfork. And this is where the joy comes in. The market has since October last year moved down within this bearish pitchfork. So that's since October last year. Mainly as it is now in between the middle, mainly as it is now in between the middle time below, currently at 397 even, and the upper time above, currently at 476 and a quarter. You can clearly see the tines of this pitchfork highlighted in purple on my daily chart. Now, I thought back to the time when I originally drew this pattern that it might, at some point in its evolution, it might eventually need finessing or even turning into a shallower bearish shift pitchfork, both of which I would have been happily done in a heartbeat. But so far, and it has been quite a journey, so far it has not needed any surgery or finessing, and it is still excellent in showing the bearish angle of attack of this market. The only new feature in recent days has been the drop below the congestion between 438 to 446, resulting in a weekly key reversal down 2 weeks ago, as prices move towards the middle time, and the emergence of some old support from 2 necklines very close together generated from the November 2019 to February 2020 move at 398 3/4, which is highlighted in bright red, and 400 3/4 highlighted in green. These are also close to December 2020 low at 396 even. Last week I said that this would be the next area of support along with the middle time, and so it has become this week, with Monday and Tuesday of this week making a 2-day bullish meeting lines pattern, as well as Tuesday making an outside day pattern, if only just on that latter piece. Winnipeg canola. Back in late summer last year, I said at the time, and I quote, "It became evident since the start of the sideways to slightly lower movement we've seen here since June that there was a shallow bear channel, currently 862.80 to 750.30, and it is this that had been driving the market lower during the summer." End of quote. To emphasize this point, I further added, and I quote, "So it seems that until that slightly bearish channel breaks or morphs into another pattern, it will continue to show the slightly bearish angle of attack of this market." Well, as you can see, the bear channel has still been there, leading the way lower until mid-March. I hope you see it. I've highlighted in dark blue on my daily chart. Now, before I expand on the break low, let me take you back to the start of this year and another feature that has impinged upon the market. It was the June 2020 to February 2023 broken uptrend, which I've still kept highlighted on my daily chart in bright red, and that's currently at 859.70. I've deliberately kept it highlighted on my daily chart as I believe it's still influencing the market despite being clearly broken. The reason why will soon become evident. Okay, so the market sorted down through this uptrend in early March, and for a while it looked like the bear channel may morph into a sideways triangle made up from the upper bear channel line and the broken uptrend. Now, I personally have embraced this idea of a sideways triangle, but I saw the sideways triangle and the bear channel both working together with the subsequent move lower, and with all the implications they both have. Thus, for the sideways triangle, we have a primary target in the 768.5 area and a secondary harder to reach target down in 688 even area. 11 weeks ago, the market dropped down and reached the primary target, though the market took its own sweet time in finally reaching down to the secondary target at 688 last week. This move lower additionally meant I placed under closer scrutiny some of the potential targets below for the bigger bear channel pattern. Thus, the primary target of this move lower and out of the bear channel had already been reached in the 726 zone. However, we still have a secondary harder to reach target X2 that is still living, still alive, lower down near the bottom of my daily chart in the 644.5 area. We are so much closer to this target this week, and it would be reasonable to look at it being achieved maybe as soon as next week or even late this week. Now, one final point, and it is something I have raised some 20 weeks ago, and on every occasion since, and I quote, "There is just the thought of what may be the whole April to date action," so that's April 2021 to date. "It can be seen as part of a very large bearish halfway hesitation. It is all still too early on these thoughts, but I think they need to be present when things start to happen, eventually." End of quote. We're again further along, and thus closer than ever now to looking at this action as a possible very large bearish halfway hesitation. We are close enough that I dare suggest a possible downside target for such a pattern, down in the 560 even zone. This is another level that you can put in the back of your diary and look at every so often, just in case. Bursa Malaysia crude palm oil. The small but effective reverse head and shoulders pattern, amongst other factors, caused the market's move up into early November last year and the construction of a new mildly bearish pattern. The mid-August to early November 2022 mildly bearish shift pitchfork, which is highlighted in green on my daily chart. This mildly bearish pitchfork has guided prices more or less lower, in between the upper time, currently 41.98, and the middle time, which was below but is actually just above now, currently at 35.60. 3 weeks ago, prices tried punching down through the middle time, but as in March and also December last year, the market failed to push down through. What was interesting back at the end of April was how prices reverted back up, gapping higher, but to a lower level high in early May than in April and in March, and also created an island top centered around the action from 2 weeks ago. The fall last week has been the most concerted attempt to move below the middle time of all, and we have indeed had multiple consecutive closes below the middle time. But this most recent move lower has yet to be properly exploited. Now, going back to the island top from early May for a moment, the primary target area for this pattern was in the 35.25 zone, a level that has already been achieved. But a secondary harder to reach target X is still live in the 34.10 zone, a level we have come awfully close to reaching as recently as yesterday. It'll be interesting to see if this level, so close but not yet pierced or achieved, can be reached. Finally, we have a dead cross, a lagging indicator, and that's of the declining medium moving average, currently at 39.20, moving below the declining long moving average, currently 39.24. This one took its own sweet time in appearing, threatening such a move down for many days. Thus, this dead cross has a lot of question marks over it.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.